Hey, what's up you guys? Welcome back to the channel. Thank you so much for tuning in. I really appreciate it. So hey, in today's video, I want to talk with you guys about why you do not need to diversify your investments, because really when you get right down to it, I know it sounds a bit harsh, but diversification is for those who are ignorant in the investments that they are making. And the reason why I say that is because if you're ignorant about the investments that you're making, well, then you're going to say, okay, well, I don't want to, put all of my investments in any one investment, or I don't want to invest in too much in any one asset, because what if, it goes down in value, or what if it doesn't pan out like I thought? So then you will diversify. But in this video, we're going to talk about and explain why diversification is really just a myth and it's a lie. And if you really know what you're doing, then you do not need to diversify your investments. So if you're ready to find out why you do not need to diversify your investments, if you want to get rich and build wealth for yourself, be sure to stay tuned, watch this video the whole way through. And if you can, go ahead and give this video a like. Be sure to hit that like button, and let's go ahead and dive right into today's video.
We think diversification is, as practiced generally, makes very little sense for anyone that knows what they're doing. Diversification is a protection against ignorance. I mean, if you want to make sure that nothing bad happens to you relative to the market, you own everything.
All right, you guys, so you just heard it right there from that video clip. You heard it from the man himself, Warren Buffett, that diversification, the reason why an investor diversifies their investments is because they're ignorant in the investments that they're making. And, there's nothing wrong with that. But the problem comes, if you don't need to understand every type of investment. The problem comes when you're just saying, okay, well, I don't understand this thing and I'm still going to invest in it. That's where the problem lies, right? So, and that's what leads investors to diversifying, because they're saying, okay, well, I don't understand this thing, but I want to be in it. And it's like, well, if you don't understand an investment, well, then you shouldn't be in that investment. You shouldn't just say, hey, well, just because everybody else is in it, then, and I'm just, I have FOMO and I have that fear of missing out. So I just want to go ahead and put some money in there, because what if everybody's in there and that investment does terrible? And you hopped in and then now you got the same result everybody else got. And that's why you don't have any business just diversifying your money just for the sake of diversification, because then you're going to also, just as sure as you're going to get in investments that are going to win for you and they're going to pan out, you're going to get investments that are going to do terrible for you. So if you went ahead and took a different approach and said, okay, why go ahead and put my money into some things that I know nothing about, and then also pour some money into things that I know a lot about, you would serve yourself much better off if you just said, okay, I'm gonna study, potential investments, and then after I fully understand exactly what type of business that, this is that I'm looking at as a potential investment, or a stock, or a piece of real estate, or whatever it is, once you understand that investment very well, you understand, what type of asset class it's in, what does that business or service or company, what do they offer? Why is that a great investment? What makes it a great investment? Is the price that you're going to pay for it, does it make sense? All of these type of things. And once you have a very good understanding of all of these things, and you're looking at these investments as investments, and you're not just looking at them like, for example, just a stock ticker symbol, that just trades up one day and down one day on a screen, and you're not looking to just trade day to day, and you're really truly thinking as an investor, and you're studying these businesses that you're looking to, potentially invest your hard-earned money in, so then you can get rich and you can build wealth. If you just study your investments very well before you get in them, you're only going to need, 1, 2, maybe 3, stocks. And that's going to do very well for you. Like, you're not going to need 20, 30, 40, 50, 100 stocks. It's like, you don't need to believe that lie. Like, I personally own 2 stocks. That's it. And if you want to know what those 2 stocks are that I own, be sure to subscribe to this channel, and I will be posting a video soon letting you guys know what those 2 stocks are and revealing my stock investment to you guys. So like I said, if you want to find out what those 2 stocks are that I hold in my investment portfolio, subscribe and I'll show you guys and reveal the 2 stocks in my portfolio. So I no longer practice this idea of diversifying and believing, again, this myth and this lie that, hey, in order to be a good investor and in order to get great returns, that you need to, spread your investments out, all over across the market, or that you need to just do something like buy an index fund. Now, something that I do want to note and something that I do want to say is that if you know that, hey, I don't really know anything about when it comes to business or finance, or I don't want to put in the work, like I just truly don't. I just want to invest my money. I want to get a consistent rate of return over a long period of time, and you're fine if that means, because you don't want to do any work, that you're willing to accept getting a lower return as a result. Well, then that is where something like diversification will make sense for you. And that's where you could do something extremely conservative, like just invest your money very consistently over a long period of time into something like an index fund. And, a really good index fund, if you are going to do something like that, would be like SWPPX. That's the stock ticker symbol for an index fund that tracks the performance of the S&P 500. And so that particular index fund, I invest just my emergency fund in there. Like that's where I put my emergency fund, and that's just solely for, emergencies. But I don't invest money for like, hey, I want to grow my wealth in some index fund. Like I just simply don't do that. It's far too conservative for me, and like I just truly want no part of that. So yeah, that's my take on index funds. Now, if somebody does, like I said, if you are like, hey, I don't want to put in the time, I don't want to, read up on these businesses, I don't want to find out, what makes them a great business, or what makes them, what makes that a great stock to get into, and I don't want to understand, what's the products that they have, or what's the service that they have, or what's their competitive advantages, or maybe it looks like a great stock right now, but maybe it's not going to be really soon. So all these different type of things, you don't want to basically put the work in, you don't want to study businesses, and you just want to just have a very safe, consistent, solid return over time. Well, then go ahead, pour your money into something like an index fund. And yes, an index fund is extremely diversified, and you're going to get very average results. But on the other hand, if you're that person like myself, and I'm sure there's other people out there, maybe it's you that's watching, and you're like, hey, I want different type of returns. I don't want to just shoot for the average. I want something above average. I want to achieve, getting rich and building wealth in an aggressive type manner. And I'm willing to go ahead and study these businesses, understand what's the product, what's the service that they offer, what does this company look like going forward, what makes this a great investment. And when you realize, there's all these different things that you've studied about the business, and you're very confident and you have great conviction in investing into that stock or that company, well, then you go ahead and only then at that point do you go ahead and then invest your hard-earned money. And you don't need to be diversified. You could have, 1, 2, maybe 3 stocks, and you're going to do very well over a long period of time. And then the only point and the only reason why you would end up finally selling that stock or that business is because something fundamentally about that business changed from when you initially first, sought to like go ahead and invest your money in there, and you realize like, hey, this is no longer the investment that it once was. Now's my time to get out before, it just totally like starts falling apart, and you go ahead and take your returns and move on to the next investment. So now you guys know why diversification is a myth, diversification is a lie. And if you want to be an above average investor, diversification is not your friend. So be willing to do the work, be willing to put in the effort, study your investments very well before you invest your money. I really hope you guys found value in this video. If you guys did, be sure to give this video a thumbs up, comment down in the comment section below, let me know your opinion on this video, what you think about diversification, and then also to be notified whenever I upload new videos. And I upload videos every single week, every single Monday, so be sure to hit that red subscribe button. Also turn on that notification bell so that way you'll be notified each and every time I upload a video. Thanks again. Thank you guys so much for watching.